Greetings to everyone. I think thank you very much, Nishtha, for agreeing to be with us and spending your valuable time with
Thank
us.
you for inviting me.
It's been wonderful. This series, Chief Auditor Series, Sama Audit, Satish and myself, we said, let's have this series where we can share good practices, beliefs, good incidents, all the professional work that is being carried out by internal auditors, risk managers, and educators and academics across the internal audit fraternity. So today is the 27th session webinar of this Chief Auditor Series, and it's been going great so far, and it will be great today. So with that, welcome once more, and I'm going to informally introduce you for the benefit of all the viewers who are going to view this later. So I think Nishtha Khurana is a qualified chartered accountant with over 18 years of experience in the field of operational risk management, internal audits, SOX, enterprise-wide risk assessments, internal controls, etc. She has extensive experience in setting up operational risk frameworks and internal audit functions, as she dabbled with internal control frameworks, risk-based internal audit, IFC and SOX readiness and compliance, etc. Among other areas, she is currently working as a Chief Risk and Compliance Officer with MMTC-PAMP India Pvt Ltd. She has previously worked with reputed organizations like Home Credit, RBS Group, and Deloitte in various roles and responsibilities. She completed her CA at a very young age, 22, and she completed her, this is I think important for all the viewers, she completed her master's from University of Applied Sciences in Berlin, Germany, where she won the DAAD Best Student Award. So this is something unique for a chartered accountant to undergo a master's, in applied sciences. Prior to that, she had completed a graduation in BCom honors from Sri Ram College of Commerce in Delhi. She's a certified facilitator, having cleared the effective facilitator certification from the prestigious organization Leadership Strategies with Flying Colors. And she has strong organization and leadership skills, a keen eye for detail, and an ability to work well with people. She enjoys working in a multicultural, dynamic environment and is at ease in a fast-paced environment. In addition to that, as I was speaking to her and as we have been following the LinkedIn profile, she has over 300, a collection of over 300 handloom saris, and she's part of a group, which meets regularly and discusses handloom saris and handloom artifacts or items, fabric from across the country. So I think today, being an Independence Day, I'm bringing that up in the Chief Auditor Series. Today we are discussing this on the on the Independence Day today in India. So I think that's something which you should spend 3 to 5 minutes, and enlighten all our viewers on what this forum is all about and how you discuss the handloom fabrics, etc. So this is the other side of Nishtha Khurana, very important again. So I think we need to know about that also. So over to you, Nishtha.
Thank you. I think I'll delve on that first because that's my passion.
Yes, please.
So I started wearing saris when I think in 2014. When I started taking some trainings. What happened was I was taking risk and control risk management framework trainings in Royal Bank of Scotland. And I was one of the youngest in my team. So I looked like a student in front of very senior people. So I thought, okay, these people will not take me seriously unless I dress up and look, senior. So I started wearing saris only on the days I would take training, but it grew on me. And in 2015, I did what became popular as a 100 sari pact. You had to wear saris at least 100 days in a year. That was what the pact was all about. Obviously, you could repeat. You don't need to own 100 saris. But when I was doing the pact, I came across a lot of information on handloom saris. And I started reading about and I read how the handloom weavers in India are suffering because most of the weaves have moved to power looms. So very popular, especially mass weaves, they have moved to power looms. And although I'm not against power looms because they also generate, employment and income for the people, and not everyone can afford costlier handloom saris as well. But the plight of weavers was really, it was really touching. And the middlemen are there who make money, but the weavers hardly get peanuts. So I started reading about different kinds of weaves. I own about 200 odd weaves. Some are repetitions, so that's why 300 saris. Uh, but the fact is that I only buy directly from weavers. I never buy from middlemen. I buy directly from weavers. I try to buy different weaves, and I never buy in a hurry. I wait until I get the right contact of the weaver, and then I buy. So it's more like a passion. It's not something I do. Ki, okay, there's a wedding, so I should buy a sari. I always have ready saris because I keep on, accumulating. And you mentioned that you'll talk about it here. So I chose a weaves today intentionally, what is known as a masses weave. This is called Suta Luga. It's from Odisha. Suta Luga basically means a cotton sari. And this is worn by masses. Same with the blouse. This is also a Konark wheel hand woven fabric, and it is also worn by the masses. But I just wanted to demonstrate that even the basic of the weaves, if you just wear it right, it looks like a corporate weave, and anybody can wear it any day. So you don't really have to spend, thousands and thousands on Banarsis and Kanjivarams. You can go for very basic weaves. And Odisha, a Sutaluga from Odisha comes as low as 1,000 rupees. So it's a, and I have saris that cost 700, 800, right till 30,000. So there are other weaves which are costlier. I've not yet reached that stage yet where I start amassing them. But having read about the handlooms, I sometimes speak on forums where we talk about handlooms. There are groups who encourage handlooms by organizing sari meets, and they usually keep one or the other weave as themes. We attend, we celebrate the weaves. We talk about that. Even I used to organize sari meets earlier. I've organized where we've talked about Odisha weaves. So Odisha itself is so wide. You have approximately 50 to 60 different type of weaves only in Odisha.
Oh.
And we also talked about other crafts like Madhubani from Bihar, Bandhani from Bengal. Very few people know that Bandhani is also done in Bhuj, Kutch in Gujarat. So I purposefully wore that weave for the Bandhani weave just to make people aware and talk about it. And different types of weaves are discussed in these forums. So I enjoy being part of them. I even encouraged my mother to start an handloom online sari business. She's putting a break right now because she's taking care of my nephew, but probably she'll start again soon. The only idea was me buying one weave from one weaver hardly helps. So if you encourage a lot of people to buy directly from weavers, we could do that. So my mom was not doing it for profit. We were just basically covering our costs so that everything could go to the weaver. That was how we got engaged with this handlooms and the weavers. Uh, I think COVID was very important for us because the weavers were really suffering, and we in many ways managed to get a lot of weavers good orders. And especially I really thank my friends and all who waited months to get the deliveries because the courier services were not working. And but people readily helped out. They paid in advance, but they waited months to get their saris. It was very overwhelming, and we were able to arrange, a lot of food items and dry rations for the weaver villages because of the orders we got. So that was very nice. At least you felt content that you're helping out people in need. And
Really,
that's
really wonderful. Really
it.
wonderful, Nishtha. I think it's really a good start to today's
Yeah,
presentation, and really nice to know about all this, because we
yeah,
discussed, but we did not come. You did not discuss in such a elaborate fashion as you are
yeah,
explaining today. So very good. I think today, being the Independence Day, we are talking about handlooms from weavers, and how
yeah,
you have, and with your mother, is trying to help out and create a community where you
yeah,
can directly buy from the weavers, and that art is still on,
yeah.
and still, really great. Thank you very much for sharing this with all of us.
Yeah, so back to risk management and
Please,
internal audit now.
please.
So I understand you want me to share a bit about my journey, what I'm doing in my current role. And although I don't feel I'm very qualified to share tips, but still some tips. So I'll basically follow one or two practices that I generally follow.
Sure, please.
So I'll share my screen.
Yes.
Is it visible?
Yes.
Okay, so I'll move to the slideshow and
Please.
okay, so Chief Auditor Series, I've mentioned Chief Audit Executive Series. I think it's one and the same thing. So I'll just talk about myself. I think Deepji already mentioned my background has entirely been commerce. I managed to get through to Shri Ram College of Commerce, and when I reached there, I realized that I don't think I'll be able to only do, BCom. So I had to keep myself busy and do something else. So I initially planned to do MBA, but then I started with chartered accountancy because I saw an uncle who was a chartered accountant, and I started interacting with him a lot. And I felt once I got into the chartered accountancy mode, I think the MBA just flew out of my mind. I was so focused on chartered accountancy. I cleared my CA a year after I graduated. And my articleship itself was in internal audits. I was doing articleship from Sani Natarajan and Behel, which specializes in internal audit. From there on, I moved to Deloitte in 2003. Deloitte at that time was just one partner, 40 member. I was the 40th employee of Deloitte in 2003. And they didn't have separate practices for statutory audit, internal audit, etc. So we used to do everything. Most of the time there was an internal audit. I was already included in the team, but I also did statutory audits. I also did taxation work, taxation audits when I was in Deloitte for almost 2 years. Then Deloitte in front of me merged with SB Moria. From 40, we went to 200. And that was when we started having different practices. We were still doing both kind of audits. Then I went abroad for 4 years, primarily because of my husband. He took a PhD position over there. I just couldn't sit, idle at home. I tried shifting to Deloitte, but language was a barrier. They told me first learn German and then you can join us. So I started learning the language. I can speak, read, understand German, but writing is a little bit of problem. And I still have friends with whom I talk to in German. I started learning the language, and then I also applied for a lot of courses. I got selected in the master's course in University of Applied Sciences in Berlin. Um, Initially, I planned to do business administration as my majors, but business administration was taken in German. So I just developed cold feet in writing exams in German, and I took economics as my majors. I did a thesis as part of my master's, which was selected for publishing as well. Basically, the theme of my master's thesis was so I studied the 1929 depression and compared it with the stock exchange trends that were happening. That was 2006. So during that time, and I had predicted a stock market crash lingering around. So my master's thesis won an award, which basically got me a very good grade, and I topped the university as well because of that grade. I was invited to present that paper in one of the conferences in economics. And I was out of 100 speakers, I was the only master's students who was invited to present a paper. All the others were either professors or PhD students. And out of those 120 papers were selected for publishing, and one of them was mine. It was published in a book, and the students of the same university then nowadays study my paper, because in 2008, when the financial crisis hit, whatever I had predicted actually happened. And I started getting a lot of emails asking for my research work and questions. It was very overwhelming. But 2008 was also the year when I shifted back to India, and everyone was reeling with the financial crisis. So I contacted Deloitte and I asked them whether I could get back on board, and they said their hiring is frozen. So I joined the internal audit team in Control Solutions International, which was later on absorbed by Protiviti. 6 months later, Deloitte contacted me again whether I'm interested. I went back to Deloitte, worked there for 2 years, primarily in enterprise risk services. So I was dealing with everything related to ERM, business process application controls, ITGC. We also worked on SOX readiness and compliance. IFC came later, but SOX readiness and compliance. We also did a lot of workshops on business risk intelligence. We were also involved in a lot of internal audit services. And so my entire background has been like operational risk management. After working for 2 years with Deloitte, I joined Royal Bank of Scotland in the second line of defense teams. I was responsible for risk data analytics, and we used to work on risk profiles of the various businesses of RBS, create reports, studied the risk exposure against the risk appetite, and my reports were read by Meera Sanyal, who is the country executive. And after 2 years framing the policies and procedures in risk management, I moved to the first line of defense when their global financial services shifted to India. I became a risk partner for the biggest team, biggest business. They used to call it business, but it was basically a financial control team. Started with 300 people and went on to be the single point of contact for 1,750 large team. And we used to do risk profiling, risk committees. We were maintaining risk registers. We were doing risk awareness trainings. We were doing SOX testing. We redid the entire SOX packs. We also were doing all these transition risk assessments. And only after our sign-offs, the processes would go live. So very interesting role, very diverse experience. I think that is one of my best stints where I learned a lot when it came to operational risk. I went on to join the internal audit team also in Royal Bank of Scotland. And after about a year or so, I joined Home Credit as head of internal audit. Home Credit at that time was a startup. So although I was head of internal audit, but I was also doing the entire second line of defense jobs, helping them frame policies. IFC landed up in my kitty. So I had a separate team for internal financial control. We first implemented internal control ICOFR, and then transitioned to IFC when they listed some debentures. And I started with a 1-member team, and by the time I left 7 years later, I had an 8-member team. I was looking at internal audits. I was looking at concurrent audits. I was looking at branch audits. I was doing developing automated checks for continuous monitoring. I was looking at IFC. I was also working as a part of the global team to do peer audits and train the other heads of internal audits on various types of audits. We also did a special assignment where we performed some audits for the Czech National Bank. Yeah, so a lot of trainings over there as well. I used to take bespoke trainings, not just in risk management, but also in gender sensitization and gender equality. I was the president of the internal complaints committee as well. So that also fell in my kitty. And yeah, so very, very fulfilling stint in Home Credit. And my most recent stint, it's Chief Risk and Compliance Officer at MMTC-PAMP India Pvt Ltd. I joined here in April 2021. It's been a year and a half, and what a roller coaster ride it has been. So I look at 3 verticals over here. The first one is the biggest one, which is risk management, where I also look at IFCs. I also look at vendor risk management, apart from just purely developing the operational risk framework. We also look at credit risk. We also look at, very briefly, at the market risk, not too much, but a little bit. Then my second vertical is compliance monitoring. It's a manufacturing sector, and that too in precious metals industry. So we have loads and loads of accreditations. We are dealing with labor laws. We are dealing with shops and establishment acts because we have retail centers. We are also dealing with India Good Delivery Standards. So BIS accreditations are there, and we have to meet with their requirements because we also provide hallmarking services. So MMTC-PAMP is basically into refining and minting of gold and silver coins. That is the primary business. They deal both with B2B and B2C customers. Of late, they delved into digital gold and gold accumulation plan business as well. Then they also have what they call hallmarking centers. I think last year you already know that having hallmarking became mandatory for all jewelries. And we have been providing those services for 3 years now. We started with Titan as our partner, but now we do it for everyone, even for Gucci, Cartier, and everyone. And we also recently started into what we call industrials business. It's basically electric contacts based in silver based or even non-silver based, which are used in small electrical switches. And they are now evaluating e-recovery business as well. So ESG is a big agenda on my plate as well. We are still learning as we go ahead, but the point is it's a huge wide role, and even internal audit falls under me, although we have outsourced it to one of prominent internal audit firms, but I still have dedicated resources who work with them and who make sure that all the open action items, etc., are closed. I give presentations to the audit committee still, along with my internal audit partners. And I also deal with risk and compliance committees. So yeah, so that's that's what is there on my platter. I'll like I already mentioned that these are the three verticals that I look at. I've basically come to formally set the my role and the area into three, this kind of a risk framework. We start with enterprise risk assessment, which is very first step we do every start of the year. And basis that, we identify what are our high risk areas, medium risk areas, and low risk areas. High risk areas, whether we deal with internal auditors or we deal in-house through our risk management process reviews, have to be audited every year. So it's a once in a 3-year cycle that we follow. Medium risk at least have to go through either internal audit or internal process reviews once in 2 years, and low risk once in 3 years. Now, how we structure it, I've deliberately kept internal audit outside this purview because it is third line of defense, and I don't want to mix up with what we do under risk management. Under risk management, we focus on compliance and governance. Compliance monitoring is a huge part for me. I have 3 dedicated resources just looking at compliance monitoring for us. We also look at policies and procedures, not just related to risk, but even otherwise all SOPs, etc. in the company. We are the facilitators of preparing everything. They have to be in the standardized format. When they have to go through our team's review before they are rolled out as final, because we sometimes feel that although the risk owners have the best intentions in mind, they sometimes miss out on areas that the risk team can highlight, like even asking basic questions: why, where, who, how. So these are the questions that probably don't strike to the people. They're just writing down the steps they're doing. For them, it is the entire thing is a process. They don't segregate it between a process step or a control. So that is where we feel that the risk team's expertise is needed. So we facilitate not just in risk policies and SOPs, but we also facilitate in all policies and SOPs. We are also the custodian of the final versions. Then last part is internal financial control. The IFC piece, when I came here, was last done in 2017 by one of the big fours. It had not been revised. Some of the controls had become redundant and were consistently failing, but they felt they didn't have the expertise to redo the entire framework. We redid the entire framework in 4 months. I think it's a record. In my previous company, we did it in 2 years. So redoing the entire IFC framework in 4 months, it was a daunting task, but we had no other option. Otherwise, we would have still had IFC failures in the last year, but we managed. And we now have both entity level and process level controls. We are not just looking at financial reporting controls, but we've also included operational controls. We anyways, because of the nature of the industry, have to look at fraud risk related controls. And we monitor all of this by implementing some risk management tools. So these are the tools that I've put in place in the last year and a half. We already had a compliance tool from one of the big fours, but we were not in the mood to renew it because two reasons. First, uh, every time we change our stat auditors, we end up changing our compliance tool. So we wanted to move outside the big four tools and have a tool which is, not just popular because it's a big four tool, but is actually good enough and focused on our requirements. So we chose a tool which has a very good coverage for labor laws, shops and establishment acts, etc. And then we customize two more modules in the same tool. One is for the vendor risk management. Now, KYC and KYS is a huge piece for us. It is almost as good as a small vertical for me, because in precious metals, you keep on dealing with AML related, money laundering related issues. And so those checks, etc., are very important for us. And if we are not doing them right, we stand to lose our accreditations. Now, MMTC-PAMP is the only LBMA, London Bullion Markets Association, good delivery partner in India. And we are also ISO 9001, 14001, 45001 certified. We are also accredited with Responsible Jewelry Counseling, RMI, everyone. So for me, this piece is very important because all the OECD guidelines, FATF guidelines become applicable to us the moment we take any of the accreditations. So these are audited every 6 months by one or the other institute. And this is something we are taking very seriously. But the entire thing was a manual process. We were gathering everything on email, to and fro. It took so much of time. We decided we want to automate it. We built in a module where the moment you select the type of customer or supplier that you want to onboard, the checklist throws up. The business users have to upload all the documents required. Then the HOD looks at them, approves it, and then it comes to the risk team. We do our additional checks like world checks, we do PAN checks, GST checks, and a few other checks, due diligence checks. And then it goes to the account creation team. Before that, no customer or a supplier can be onboarded. And we have also recently rolled out a re-KYC, re-KYS process once in every 3 years, because the vendor onboarding is one-time process, but vendor management or monitoring is a continuous process. Like I said, IFC we redid, but now we've also, starting April this year, we went live with this module where all the risks and controls have been onboarded on this tool. And rather than testing it at the end of the year, what we've done is we've spread our testing throughout the year. Every month end, the control owner gets an alert that you need to upload these many samples against this control. Then my team has an option of choosing additional samples because surprise checks. And we spread the testing throughout the year. If we have a failure, we have an immediate alert, and we can close it at the time rather than waiting for the end of the year for the control failure to emerge. So that is another thing that we put in place. We've put in place a risk register. We've already started with strategic and high level risk. Now we are in the process of putting in risk register for individual businesses and departments and functions. We already have an operational risk incidents management policy in place. We have a tracker in place. Any operational risk incident basis, the risk rating is investigated, escalated, and accordingly. We have an accreditation tracker. We have so many, and each of them has a different requirement. Something needs to be audited every 6 months, some audited every year. So we maintain a tracker. Internal audits. Previously, our internal auditors were not looking at validation of the corrective action plans. we started doing it in-house. They just would take the person's word for it that we've closed the action and they were okay with that. We said, okay, that doesn't work for us, at least for the high risk or the medium risk, we will revalidate. And we also make sure that wherever possible, it is incorporated in the SOP or the IFC so that it is also monitored throughout the year and people just don't go back to the previous phase. We have policies and SOPs repository. We also started working on data security projects. We started with the critical documents cataloging. So so 12 years in business, we had not started destroying the data that was not required to be retained anymore. That is something we have started working on. But before all of that, we had to identify where our critical documents were. So some documents were lying with the company secretary, some with the plant head, some at the PVC centers, retail centers. So we compiled everything, we cataloged everything, we made sure that we have scans of everything on the shared drive with right access controls, and we moved all our critical documents to our vault in the plant with a two-factor access. So two-factor authentication access. Nobody can now access our critical documents, especially the technical know-how related documents, without two senior people's permission. And even then there is a tracking of when it comes back. So that we have already put in place. Surprisingly, our critical documents were 620 in number, 620 in number, because of the business, the kind of business we deal with. And you can only imagine the non-critical document, how much they would be in number. We're still working that out. We still don't know how many, and we're trying to put information classification in place and things like that. We also started working on risk awareness related trainings. We first started with compliance related trainings. There are monthly trainings with our retained lawyer firms. We pick up one topic, work with them, and make sure that we are covering all the relevant topics for us. So health, safety, pollution, these are really important topics for us. PMLA, then things like noise pollution, then we even covered labor laws and stuff like that. And then we have started already doing refresher courses for them. We are also now working on, so we recently did a risk awareness survey along with our internal auditors, and we identified what all areas are our weak points, and we've started putting in plan to work on those areas, so that risk awareness, it's not just on the papers, we start actually working on risk culture. So if I take, for example, DFP and signatory policy, the people who are signing, etc., they believe that it's owned by the risk team, and risk team doesn't have anything to do with the DFP or a delegation of authority or signatory policy. So those kind of awareness, what exactly is there in the code of ethics, so everybody just signs it, and it's this is reiterated every year through a soft copy on the HR system. But they are in so much hurry to, I don't know, put attendance or raise leaves, they just skim through and they don't really go through in the deep. And we noticed a few messages, and when we sent out warning letters to the people, they were like, oh, I didn't know this was part of the code of ethics that we signed. So we decided that is something also which needs constant reinstatement and reiteration. We are working on that as well. Same with whistleblower policies, a lot of awareness related things. We are planning to make it more of a fun activity, so that it's not always sticks, but we do carrots and sticks. So probably we'll do some risk awareness week, we'll hold some contests and quizzes, and maybe do some rewards and recognition as well. And yeah, so that's what I've been keeping busy in this year. And lastly, I'll take just 5-10 minutes. I still don't, like I said, I still don't think I'm senior enough or knowledgeable enough to start imparting tips for how to be successful in risk management. But there are a few things that I really take seriously, and I feel these are the ones that help me in the long run. So I would share that. I've been dealing with audit committees and risk committees for 9 years now. And I remember even before that, when I used to see my seniors dealing with them, I remember there used to be a time when audit committee would happen once in 6 months, and the audit committee chairperson wouldn't even remember who the head of internal audit or the chief audit executive is, and the chief audit executive would also struggle remembering the name of the chair, because they would meet only once in 6 months. And that too, if the audit committee is, say, I don't know, 1 hour long, your slot is only probably 30 minutes or 20 minutes. So that used to be your if I take the tennis analogy, it was the match point, it was your make or break thing. So if you manage to click in those 20-30 minutes, it's good. Otherwise, your entire teams and entire department's performance is questioned. So but I think over time, this attitude has changed. Even the audit committee has started realizing the importance of internal audit, and not just as a corporate watchdog or a policeman, but as a risk partner, because there is a lot of things that they can do even within the scope of a third line of defense to help the company. For example, uh, designing the audit plan in accordance with the enterprise risk assessment. That is, I think, the very basic. That is the first thing I put in practice when I joined as head of internal audit in Home Credit. And I realized that India, so Home Credit is existing in 10 countries. And at that point, when I started interacting with the head of internal audit, I realized, the group head of internal audit, I realized we were the only ones who were actually looking at the enterprise risk assessment while designing our internal audit plan. And then in one of the group audit committees, the one of the independent directors questioned. So they were just flipping through the PPTs, and the India internal audit plan showed up, and there was a risk heat map on the side. And he questioned, what is this? So our group head of internal audit explained that Indian team basically looks at the enterprise risk assessment and then bases their internal audit plan accordingly, so that they're covering everything at least once in 3 years. So he said that, okay, once in 3 years is maybe too extreme, but at least you should roll it out through to the entire group and cover it in at least once in 5 years. And that's when they onboarded my services to roll out the same methodology to the entire group. They wanted to go for one of the big fours, but then they felt, okay, the India team already does it, and they asked me whether I could help. And we did it in about 4 or 5 months. We rolled out the entire methodology to the entire group, used my templates, customized it, and made them standardized to cater to the entire group. And basis that, we used macros to freeze the columns, and then put in very basic Excel formulas to highlight. The moment you put the impact and the probability ratings, it would highlight what falls under high, medium, low. And then you had to add when was it audited last, and then it would automatically show what should be covered in your this year's plan. We automated the entire thing, and and now I'm trying to put this in place even here, not for internal audit planning, but we are trying to use this as a risk taxonomy. So after inherent risk ratings, we will do an additional step. We will go to the residual risk rating in the same format. And then basis that, wherever our residual risk is not meeting our risk appetite, those areas will be automatically highlighted. And then we will need to put some action plans or corrective actions in place to make sure that our residual risk matches the risk appetite. That is something I'm working with the group risk officer, even in MMTC-PAMP. And hopefully by the end of this year, we'll have that in place as well, because we've already started working on the risk taxonomy. But I think I digress. I was talking about the risk committees and the audit committees. I feel that as an internal auditor itself, you could do a lot to help the company, and your coverage of risk areas should be according to the company's requirement. And also you need to meet the expectations of the audit committee. Now for that, I actually have booked time every month both with my risk committee chairperson as well as my audit committee chairperson. Sometimes we hold additional meetings in addition to the one to our monthly meetings, and discuss specific items even before the committee. The committees happen quarterly, but we discuss a lot of things offline, and then in the committee we just present, the top level things. For example, we were talking about revamping the entire procure to pay process. Now, the audit committee chairperson suggested that the internal audit was conducted only last year, so we should not have the internal auditors do it again, and we should do it in-house. So the risk committee chairperson liked the idea, and thankfully both of them are in both committees. So he said, let's do this in-house. Let the risk management team do a deep dive review into the process and come up with some findings or operations or cost efficiency areas or process improvement ideas. And we did that, and there was like almost a 20-page report which I was supposed to present to the risk committee. And when I sent it out to them, they felt it will take too much of discussion. We did 2 hour session. We ran through the entire report. We devised the plan, and in the risk committee, we presented only the high level, 4 or 5 themes where we would be working on. So I think nurturing your relationships with the committee members actually helps you in. Also, it gives me a focus on the idea of where I should be focusing as part of a risk management head or chief risk officer, or as an chief audit executive. So I have separate meetings with the audit committee chairperson. My audit committee chairperson also has meetings with the internal audit partner of the firm that we are having. Most of the time, I'm also part of those meetings. So we know how and where we can meet the expectations of the committee. Yeah, and it also helps because sometimes you have to communicate, very difficult or unpopular opinion. So if you're already on good terms with the chairperson, and the committee knows that you have the best interest of the company at heart, so even the tough messages are easily accepted. So that is something I think it helps me in my day-to-day working. The next thing that I use, and I used to do that also in the home credit. In MMTC-PAMP India, it's easier because both internal audit and risk management are under me. So I can always use synergies. So wherever the internal audit is not providing any coverage, we pick that up as part of risk management. We do process reviews which are in areas which are not part of the internal audit, and internal audit gets the first say in picking up the areas they want to audit basis the risk assessment framework. But even in my previous company, where I was solely responsible for internal audit, I used to work very closely with the operational risk management, because the operational risk management, and then we have IFC. So basically we would be doing design testing every year for IFC. The operational risk management team would do risk and control self-assessments every year. We would also be doing audits in the same areas, in some of the areas. To look at it from the business point of view, they're doing the same process walkthroughs 3 times to different people. And then there are also, teams that are working on process improvement. I used to work very closely with them. And we used to try and time our, exercises together, so that the business has to cater to the process walkthrough part only once. And after that is done, each one of us would take our own methodology and start working on that. At least the business, even if they're dealing with 3 different teams, they don't need to do the same thing again and again. But that was also tricky to explain to them that all 3 exercises will have different purposes. So they'll have to interact with 3 teams. It cannot be one spoke for all. But still, I think it helps. Also, because sometimes the other teams start asking questions that you might have missed out. So you pool in the expertise as well, and it helps not just in for the business to come up, but even for us, the quality of the work to improve. And then risk and data analytics, I think A lot of us, especially the ones who are in the senior position and have come from a background where, I often talk about that we are probably the only generation who have not grown up in technology, but have embraced technology wholeheartedly. And probably the generation before us will never do that. And the generation after us will also not experience that. And so I never shy away from using technology. I think it's time we start relying on risk and data analytics a lot, for the simple reason that technology is the bread and butter of every company nowadays. And we are not just talking about IT companies or the fintech companies. I'm in a manufacturing company where a lot of the manufacturing processes are still manual. We've not resorted to robotics yet, but still everything moves through IT systems. We have, I think, 5 or 6 systems we are trying to, so they are right now jointed through job scheduling, but we are also trying to build direct APIs and one interface so that all of them are talking to them on a real time basis rather than on a nightly jobs basis. But you cannot be a good auditor or a risk management person by remaining aloof to technology. So not just understanding the IT systems that are there in the business, but relying on them, using the reports, etc., and applying data analytics to them helps. When we are talking about ERP systems, because of the technology, the number of transactions as against the manual process has gone X times. And looking at manual testing, maybe 50, 60 samples or even 100, 200 samples out of thousands, it doesn't add as much value as you doing a substantive testing on the entire population. So even in my previous company, we had started using SQL queries a lot, even while auditing. Even for IFC, we thought that the ones that are our regular controls, if we can build in SQL queries and just schedule jobs on a monthly or a periodical basis to give us exception reports, we will save our own time and focus on analyzing only the exceptions more and better. So if I take one example, and it applies to any company which does KYC. So in my previous company, a loan, we were giving loans to individual customers for consumer durable. And the loan was given only on 2 documents. One was Aadhaar and one more, most probably PAN. We were just designing a simple check that all transactions should have 2 documents logged against them. The moment one document was missing, an exception report was thrown out, and immediately at real-time basis, the fix was made. So, and we were starting to design similar queries for other areas. For example, you have a basic formula for how the loan amount should total to, your processing charges, your down payment, and then EMI and interest. So you just have to tune that mathematical formula into your SQL query to make sure that no errors were made with respect at the time of calculating down payment or processing charges. So so very simple SQL queries. Here also we are starting to work on automated techniques. For example, we are using so here we are using a lot of other things, other tools like web scrapers. We use World Check to do our due diligence checks. We are also doing some financial due diligence, but not too much, because gold and silver is always sold in advance. So my credit risk is very small. And so we don't use too much of credit risk modeling here because our credit risk is small, but we are still looking at a lot of data sets, and we are using Excel and macros, etc., for doing our testing. KYC, KYS automation, etc. is there. We use a lot of visuals for presentations of the reports. We use a lot of trend analysis also to figure out which are our key risk areas. For example, concentration risk, we have been looking at how we've been moving between our top customers. Even for picking samples for P2P, we looked at our top 10 OPEX items and then how it has been changing over the years. Analyzing our vendor database, how many vendors for each key non-metal raw materials we've had over the years to figure out the concentration risks. So we use a lot of risk and data analytics, and I think even the basic checks one done through these analytics helps. And when you're using analytics, even the business understands that a scientific approach has been applied, and they're more accepting of what you want to portray as a finding or an observation. So I think that also helps. And last, I already talked about how we are trying to build in risk awareness and risk culture. I think it's not just a one-day thing. I think it's a continuous process. And we are doing face-to-face trainings right now, but we also want to do e-learning modules every 4 months or 6 months, so that the same ideas are reiterated, and they're not just they go back to just being processes, and they don't think about risks. So I think the risk culture, when I joined MMTC-PAMP India, that was the most thing that I had discussed with board members even before joining. How do you value your risk culture, and what do you think about risk culture, and whether they understood first line of defense, second line of defense, and third line of defense. And I was very clear. I think if you think I can put a framework in place and it will work perfectly within 3 months, it will not work that way. We can put policies and procedures in place, and we can use sticks approach to make people obey also. But unless the awareness comes and it continues to be discussed about and talked about, it continues to be part of their performance indicators, the culture will not change. And it will only change when we are continuously talking about risks. We are talking about how it is important to make sure that the company's objectives are achieved. Then only a culture will be there, can be inculcated, and then only your problems will be fixed. So that is something I talk about often. Eventually, I feel risk management or internal auditing, it is all about communications. It is all about dealing with people and talking about personal processes. Or so even it is very easy to classify observations into people, process, technology, but we also need to understand that the technology is also operated by people, the processes are also followed by people. So you cannot really segregate people aspect from any kind of operational risk category. And the way you communicate risk to people, the way you communicate internal controls, assurance to people, it really helps both in risk management as well as in internal audit. So yeah. Did I overshoot the time?
No, absolutely fine. It was very good.
So just close the presentation. Nishtha, you can close the presentation.
Yeah, I'll do that.
Wonderful. So what a 45-minute presentation, Nishtha. Clearly bringing out so many good things, which of course I will summarize, and I'll have my views on what you said a bit later. The first question I have, Nishtha, and I think you kind of addressed it while you were talking. It's a question which has almost the same answer for both the questions. Like, is it, the companies say that it is better to have a one view of risk, everybody, there are 3 departments, which you also said. And you also talked a lot about 3 lines of defense.
Yeah.
Are the lines of defense now slowly blurring? Are they, there were 3 compartments, but now is water flowing in all the 3 compartments? That's one. And I want to pick your brains on the single view of risk across the company.
So I think you're right. There's a single answer to both the questions. I don't think the lines are blurring. I think first line of defense will always remain segregated, because they will always remain the risk owners. And no matter what second line or third line do, they cannot be shirked off or taken away the responsibility of managing risk. So first line of defense will always remain there. I think the line between the second line and third line, it's not blurring, it's becoming finer. So, and you need to tread very carefully on that line. So even when I am handling both lines of defense, second or third, like even in my previous company, IFC was second line of defense while I was head of internal audit. My teams were separate. They used to work together, but they would not interfere in each other's work. The independence of the third line of defense, it is there for a reason, and it needs to be respected. Even right now, I have the internal audit partner works very closely with me. I am the one that selects the internal audit team, obviously in consultation with the internal audit committee. And I have a person who coordinates every audit, every meeting, every testing, every discussion, but we do not interfere in the internal auditor's job. One of the discussions I have with audit committee is asking how many reiterations or versions of the report have gone through, or what are the kind of discussions the auditee and the internal audit team has gone through. When I started, I was often asked, did you get anything changed, or did you get any finding dropped? And I used to give the comfort that no, we're not getting any finding dropped. But if we feel that the finding is not good, we do challenge. We try to convince them. We don't ask them to drop it without conviction. So I think the line is becoming finer. It is not blurring, but one needs to tread very carefully between second line of defense and third line of defense.
Okay.
I often do talks about, new age internal audit, the one that I gave recently for the Institute of Chartered Accountants. And even earlier, I've done talks on evolving nature of the internal audit. In 2009, the Institute of Internal Auditors brought out a paper and it had a very nice graphic, which was like a half pie chart. There was 1/3 part, which was core internal audit rule. And that has been the traditional role that they have to audit, provide independent assurance. Then the 1/3 part was the areas that an internal auditor is forbidden to touch. But then there was a middle part, which is like a new role that the internal auditors are playing nowadays. As long as you're able to communicate to the business and the management that the responsibility of the risk management remains theirs, you can still assist them in a lot of things related to risk, like coaching internal audit committee or risk committee, or even the management on how to develop a risk appetite. You don't need to develop the risk appetite for them, but you can actually tell them or teach them how to develop one. Then how to do risk assessments, or how to report and identify risk and report on them, and then the continuous cycling of quantification, etc. You can teach and coach the business a lot on that, but you don't need to do that, and you should not do that as an internal auditor. That part is done by the second line of defense. So I think nowadays, second line and third lines working closely actually helps, as long as the internal audit team enjoys its independence and can even comment and critique the work of the second line of defense. So that's my view.
Nishtha, I think you have made such a wonderful presentation, when we're talking about risk management separately, and then, all the silos within risk management, the three silos, and then you're going to internal audit. And then, throughout the presentation, you have rightly brought out the soft side of,
Absolutely.
carrying out risk management and carrying out internal audit.
Yeah.
And, the perception which has to actually flow upwards to the top management, to the board, to give them a level of comfort, or otherwise, whatever the things are, to call a spade a spade. So, how do you ensure that you build throughout the presentation? You talked about increasing the number of meetings. There are some places you have said, increase the number of meetings with the audit committee chair, with the stakeholders, and with other people. But how do you ensure that this soft part, this culture change happens in an organization with the team's process owners, with your own teams, and with the top management? Because that's a lot, to change the perception, to change literally you're trying to change the DNA of the organization. When you're talking about perception management, so how do you make it happen? How does it work?
So I absolutely agree with you. When I joined Home Credit, it took me almost 2 years to break the ice with the management, because they've always seen internal auditor as, a policeman who comes to, find mistakes in their jobs. and they had always had an external vendor doing audits, and then building up an in-house team. It came with a lot of difficult to accept the fact that they're actually working with us and not against us. And a similar thing happened in MMTC-PAMP. Luckily, I was second line of defense here as well. So the breaking the ice became easier. But there have been times when you start engaging with executive board members on a one-to-one basis, on fortnightly or monthly meetings, and half the time they would cancel the meetings because they'll say, I don't have any findings to discuss, or we've not recently had an audit, so we don't have anything to discuss. I used to insist on rescheduling rather than canceling. I said, okay, let's just do an informal meeting, catch up over tea, coffee, and just talk about a lot of things. And many a times it would come out that just talking about their work, or just asking, is everything going all right, a lot of things would come up where you can help. And the moment you start helping as a risk person, helping them with improvising the processes or streamlining their interactions with other team, because there are ownership conflicts or hand in hand of problems, the moment you start helping them out with them, the acceptance comes easily. It's not a one-day job. It's not even a 1 month job. It takes time. It takes a lot of effort as well. So even while selecting the team, for me, what is also important is the communication skills of the candidate. We used to take written tests, but it is not only about writing reports or making risk control matrices, but also about how you are writing emails, how you are talking to the people about sensitive issues. Especially in case of internal audit, they're only looking at you as someone who's finding out their mistakes. The first thing I implemented was I changed the format of the internal audit. We started talking about things that went well in the executive summary as well. The moment you start with the positives, the negatives that are coming later on becomes more, accepting. So 2 pages dedicated to what has gone well as well over the years, what has improved, and if there is some process that where we couldn't come up with any significant findings, you do mention that as per our assessment and opinion that things in this department are currently going fine. The moment you start with that, you become more accepting. Yeah.
So, Nishtha, that brings me to the next question.
Sure.
You said that you've been helping the businesses for processes and, pointing out and helping them. And this is what you alluded to even now.
Yeah.
So, good work leads to more work. That's what I always
Absolutely
believe. So
and it leads to a larger team.
Yes. So how do you grapple with this kind of anomalies? I mean, I'm not calling it an anomaly, but given this kind of a situation.
So first of all, I never shy away from taking more work. I'm the kind of person who volunteers to the group team to help them out. Like even in this company, like I already told you, in my previous company, I was okay with rolling out the risk assessment framework to the entire group. It was a 4-month project over and above my business as BAU work, day-to-day work. Even in this company, when they started working on the risk taxonomy, I actually messaged the group risk officer that I've done this in RBS and I've done this in home credit. If you need, I can help you with that. And he was more than happy to take the help because, expertise is something, if someone has it in-house, it's always helps. So I never shy away from taking the work. Sometimes, yes, it becomes hectic. Like I've been working nonstop for 1.5 years now and without a vacation. So I decided I'll take 1 week off. I'll just sit at home and relax because even I need to recharge my batteries. But yes, having a competent team also helps a lot. So having the confidence in your team that you can delegate the work and trust them to do it well is also something that is important. I've always valued the contribution that my team brings to me, and that is also why it is very important for me to have a competent team. I've dabbled with teams which were not chartered accountants. I've dabbled with teams which were, MBAs and even CA inters. I don't have anything against them, but a lot of them need a lot of time to be handheld and taught. So if you have that time, I'm happy to take them on board. I've always taken interns, etc. on board, as long as my team can also handhold them. But there comes a time where you need to tell the management, okay, I need a more competent team. Even if it's you need to increase my budget, that's your problem. If you need to fix problems, you need risk to be taken care of, this is something where you need to invest in. You know, many of the companies, even to this day, look at risk management or internal audit as an unnecessary cost center. So I've even seen companies where they have been relegated to the worst workstations in the basement because they don't want to be very near them. But this is something that you need to reiterate, that we are here to help you. You actually need us, not just because it is mandated by the law, but because we can actually help you improvise, improve processes, reduce costs, bring in efficiencies. And our reports, even if they're highlighting some process gaps or design gaps or operational gaps, messages in the controls, in the long run, if you focus on fixing those gaps, it will help. In my 7 years of experience as head of internal audit in home credit, we started with issuing reports with, this is not in place, this is not in place, this is not in place. And eventually we had reports coming out which were very detailed, that this part of this process can be improvised by doing this. For example, even right now we did the P2P review, and a lot of the findings, we were saying, okay, you have manual controls, but your ERP has this functionality. If activated, your manual efforts will be reduced, and there would be lesser chances of manual controls always are error prone. So going into that level of detail, it helps that the organization starts understanding your value, and they stop looking at you from cost center point of view, and help you invest in having a good team.
Last question, Nishtha.
Yeah.
A very quick one. As a head of risk management, you find that last 3 years that we have witnessed, I have been very, there are a lot of upheavals around the world, a lot of external dynamic context, for every organization, for every being organization, sort of thing. So when you actually look at your risk matrices, make your risk register and risk matrices and put in your likelihood, probability, and so on.
Yeah.
How often does the top management view it? Because risk never sleeps. So, there's something which is dynamic happening around. So if people do not notice that, if it is not, pushed to the top very early, if there's something critical, then people may miss out something which they need to act on. So as a, robust risk management function, which you have set in, mechanism which you have set in, how do you ensure that, something which is critical goes to the top immediately and you don't wait for the timelines? Or what are the timelines that your top management reviews this risk register or discusses these risks with you and the process owners?
So how often they look at the risk register? As often as I want them to.
Yes.
So, you need to understand that the top management will never look at the risk register. They feel that you've documented it, it's there and it's taken care of. They will not revisit it unless you force them to revisit it. So it is my team's job to make sure that we are going through it at least periodically. We tried doing monthly, too much of work because the size has become too big. So we try to do it monthly, but at least once in a quarter we revisit it. So some plans were already work in progress, they were highlighted as work in progress, whether they have been completely implemented, whether we want to add some new risks to the. If I give you one example, Ukraine war, so everything became costlier. Then Russia and India share a good relationship, so they started offering gold at a cheaper price to the countries which were still in good relationship with Russia. But for us, we were a European country, we were following European sanctions, we were not buying Russian gold, and that means we were costlier than the market. I saw a risk there. I went to the executive board. I started talking about it. I said, you need to document it and you need to put an action plan in place because you will be costlier than the peers who will be buying gold from Russia, and we are not buying it because we are LBMA accredited, we are European Union guidelines, following European Union guidelines. And then you need to start working on other areas which will help you reduce costs. So we started driving cost efficiencies on other areas, like how to optimize logistic costs and things like that, so that our overall cost does not increase as compared to others. We also started liaising with the government when the custom duties changed. Nobody starts talking about it other unless you start forcing them to talk about it.
Absolutely.
So now the way I do it, I first present the risk register. So we have weekly business reviews. At the end of the business review, I will book probably a 5-minute or 10-minute slot, and I will run them through that. This was the risk register which was discussed last time. We want to add a few more risks. We've documented them in draft stage. We will be coming to you and talking to you one by one. These are the ones that we have documented in draft stage. Please think about it beforehand so that I'll come to you. I'll fix up one-to-one meetings with you and we'll talk about it. Then I fix one-to-one meetings with all executive board members, and don't just discuss risks in their areas, because when you're talking about strategic risks, sometimes even the person who's not dealing with that area can give you very good, insights into the risk. So we talk about all risks, new ones that we've done, and even probably the existing ones periodically. And then we do a detailed assessment as a group as well. So that is like a quarterly exercise for me, because every quarter I present the risk register in the risk committee. Before that, I review it. And internally, we try to review it on a monthly basis, so that if there is something major that we need to add, we have time enough to incorporate in the risk register and even put an action plan in place.
Great. Thank you very much, Nishtha. Thanks.
Wonderful, Nishtha. I think, this is one session where I ran out of paper and I ran out of ink, because I was making down so many notes. And, just last about a week, 2 weeks back, I was, Divji and I was also there in that national conference, and I was in a panel where there was the auditor of Raymond's also there, and based on what he said, I had called him the complete man. I'm calling you the complete woman.
Oh,
from being the youngest chartered accountant at the age of 22 or less, maybe, to doing, an applied science MBA from Berlin, to being a risk management, an expert on code of ethics, whistleblowing mechanism, understanding ethical dilemma, cyber security, fraud risk management, compliance and adherences to laws, to establishing e-module learning, e-learning modules in companies. I think the spectrum has been too large. The way in which you kind of described your experience of weaving, I think that is the thing that has helped you in good stead in weaving all these different aspects of internal auditing and risk management, probably so you don't understand where what helps, So whether I did a master's course in, applied science, whether I'm interested in weaving, whether I'm interested in music, I think all these things contribute. And I'm talking about your life based on what you told me. But there are so many things that we do, but we keep doing it, but we subconsciously, it helps in stitching it up all together. And I would say in your case, weaving it up together. So lots of learning. I don't know where to start. I don't know where to end. But, your experience about help in the COVID time for the weavers literally brought tears to my eyes, So it was very, very overwhelming to use the word that you used. But, you talked about your company, the number of accreditations and, the work which is associated with all of that was simply fantastic. You rightly brought out a slide where you talked about the risk and compliance tools which you use for compliance monitoring, vendor risk management, IFC testing. You spoke about risk registers, the operational risk incident tracker, the accreditation tracker, which is very critical, it looks like, for your business. The internal audit correction tracker, which I guess most of the companies really have. Your policies and SOP repository and tracker. your critical document catalog. I think this was the icing on the cake.
Yes.
Because you spoke of 600 plus documents, critical documents, where they are, where do they lie, who uses it, how often can people access it, the controls that you brought out in this critical critical document repository, or as you called it, the catalog, was a real icing on the cake. And your risk and awareness training calendar and the tracker. You also brought out a very beautiful system of a monthly check, which you said for your risk, where the business owners give some samples, and then you also bring out your own samples, which I think is a fantastic method of an early warning signal. And we always want these early warning signals, be it in our personal life or in our official work. We always want to be told, pre-warned, so that is a beautiful thing. The tips that you brought out, were fantastic. And don't ever say that, you're not eligible to give these tips. I think you've been one of the persons who have been most eligible to do so. You invested in relationship, and that's only four-letter word, but I mean 4 words of a sentence, but it means so much. And you alluded about how you schedule meetings before, how it has helped you, how they know the right side of you, which helps, proper work relationship. How you brought about your Indian business, how you helped out in the global operations is something that is very good. The risk taxonomy, as you spoke about, deriving synergies between the second line and the third line, was where also I asked you a question about the risk and data analytics, and our generation. You spoke about your generation, and I'm just knocking about 15 years of my age and coming down to your age as well. But really, if you see, at my time, when I had applied for a phone, means my parents had applied for a phone way back in 70s. It took 17 years to get a telephone line, and today, even in 17 minutes, if you don't get a telephone line, it's treated as a very bad service. So that's where we are, working on developing a risk culture, which is very, very important. And the most important thing that you said was highlighting, and you said you spent sometimes 2 pages on it, on what went well. So if something has gone well, have the conviction, have the people get scared saying that, if I say it's gone well and tomorrow there is an incident, then what do we do? But have the conviction of your work. Make sure you have that conviction and call it out. So all in all, I would say pen and ink ending presentation, a page filling presentation.
Thank
you. Very, very nicely done. And we're very grateful that you took your time out and came all the way. I wouldn't say came all the way, but spending a time on a national holiday for this particular episode, it was marvelous.
Thanks, Satish. I know it had been pending for some time now. We've been talking about it. But yeah, eventually all well that ends well. And thanks a lot for considering me, for giving me the opportunity to share my experiences and thoughts. And it really means a lot for me.
Thank you very much, Nishtha. Thanks a lot, Satish, for beautifully summing it up. And thanks a lot, Nishtha, because it's been wonderful, a very satisfying afternoon, I would say. I'm saying we are sitting in the afternoon today on Independence Day.
For all of us, even for me.
Very satisfying. And especially, again to repeat, especially, all the good work that you and your mother are doing with the weavers in this country. So thank you very much for the lovely presentation, and keep it up on both sides, with the weavers and in your professional life also as a risk manager and internal auditor. Thank you very much. Thanks a lot. And thank you very much, Satish. Thanks.
Thank you.